When a financial crisis hits, the message is always the same. We have no choice. The bailout is framed as rescue, as protection, as saving the economy. But here's the uncomfortable truth. Financial bailouts are almost never about saving the economy. They're about saving the system that holds it together. This matters because bailouts are back in the conversation quietly. Bank stress, market volatility, rising debt. The language hasn't changed. Only the numbers have. Here's how it works. Modern economies don't run on cash. They run on credit. Banks lend. Markets fund. Institutions promise future payments. When a crisis hits, that chain snaps. It's not factories that stop first. It's trust. Banks stop lending to each other. Markets freeze. No one knows who's solvent. That's when governments step in. Not to save jobs directly. Not to protect households. They inject money into banks. Buy bad assets. Guarantee losses. Why? Because if large financial institutions fail suddenly, the payment system collapses. ATMs stop working. Payrolls fail. Trade halts. So bailouts target the plumbing, not the people. Here's the irony. Bailouts are sold as temporary emergencies. In reality, they reward survival, not responsibility. Firms that took the most risk are often the first rescued. Losses are socialized. Gains remain private. The message is subtle but clear. Size equals protection. This changes behavior long before the next crisis. Banks grow bigger, risk becomes cheaper. Discipline weakens. Publicly, bailouts are framed as painful but necessary. Privately, they're expected, and expectations change everything. There's also the political layer. Letting a major institution fail is unpredictable. Markets panic. Leaders get blamed. Bailouts offer control. A way to stabilize headlines and prices quickly. The long-term costs come later. Higher public debt. Weaker trust. Anger that lingers. The economy may recover. Confidence doesn't. This is why bailouts feel unfair. Because they are. They don't rebuild systems. They preserve them. They don't reset incentives. They lock them in. So the next crisis looks familiar. Bigger, more expensive. Financial bailouts aren't designed to save the economy. They're designed to prevent the system from collapsing under its own weight. Which leaves the real question. If the system can only survive by rescuing itself, who is it actually built to serve?